Hello, Warriors. We're going to start a minute or two earlier so Blake and everyone can get ready for the BOE.
Yeah,
Give you
actually,
the best coverage.
thanks for doing that. I think Kman and Ryan, they're hopping and probably ready to go here. So,
Okay.
thanks.
So
Yeah, I'm here. Good morning, everybody.
you want to grab the charts, Blake? Go ahead.
I can. I was actually, and I'll pass them back over to you once we're done. I was actually just uploading this, in the chat room.
Okay.
This is
7-2
now,
vote expected and change on the rates, okay?
7-2 or 6-3.
Well, I mean the latest on 6-3, 6-3, yeah, 6-3. It apparently changed there. Okay, 6-3. Let's go for 6-3. 10 seconds.
10 seconds. Here we go, guys. Obviously they're going to keep rates unchanged. It's more about the vote right now. Here we go.
6-3 as expected.
Okay. So not dovish. So that's interesting because we're up against the very key trend line here.
Yeah.
And we were talking just a bit ago in our community, and by the way, we are trying to break this trend line right now. If it would have come in 5-4, that would have been pretty hawkish, but it seems like when we're trying to break here, so
yeah, market trading is as a bit better than what may have than what could have been. Let's put it that way. I haven't read the statement though.
Yeah, I accidentally just got in.
They're revising the outlook for inflation a little bit higher in 1 year's time, 2 years' time as well. Oh, but then by Q4 2023, they show inflation falling to 4.6 from 4.9 in prior forecast. So bit of a mixed picture there. GDP flat, that's expected. That's 0.1 weaker, not that much. Well, it's a very mixed report there on the first reading here. Very mixed.
All right. Well, it's interesting. Well, first of all, let's point out that basically the dollar has been really weak. I mean, we've seen yields break down. We've got the euro screaming this morning. Cables right into resistance, right into the 618. We popped above resistance following that vote. I was wondering why the hell we were pushing up there with the vote coming in as it came in. If it would have been
stops over the trend line, that's why.
Yeah, exactly. I was thinking, okay, well, maybe maybe it's just a stop hunt, but maybe there was something more. But what Kman's saying here is there isn't. So I think in order for the pound to really continue higher, you got to see continued dollar weakness at this point across the board, which, by the way, I mean, the euros screamed higher. We talked about this yesterday being really key support at 105.20. We got a big bounce. Obviously, we got the Aussie, right up into resistance. Actually, we're really nice screamer in the Aussie. Same with the Kiwi. Dollar CAD's come down. Even dollar MEX broke below the 200 DMA, and we're back at the 50 DMA. I mean, so the dollar has really come under pressure. But in order for sterling to really get going, I think we need to see continued dollar weakness. And we got to see yields continue to come down. But I have to mention this, the 10-year, I don't know if you guys have seen it this morning. We continue to be really weak here. So it's tricky. What do you make of this, Ryan? Are you here? By the way, I'm just seeing if he isn't here.
No, he's just joining. I think on the balance it's really mixed because review inflation at that higher, but then growth at that lower. That's it. They're revising now unemployment rate, perhaps a tad higher, but then wages reviewed higher. It's really mixed all over the place. I can't pick a side out of it. I wouldn't call it hawkish, and we can't even call it dovish. So that's it.
All right, and that's it. All right. Well, Dale, I'm going to pass it back over to you. I know there's a lot that you probably want to cover here as well. We have because we also have Apple today, don't we?
Yes, we have Apple, and what a difference a week makes
Right.
from risk off to risk on. So, basically, dollar looks like it's peaked, and we're heading lower, and you got to be long the world when the dollar is weak. So,
Well, here, you know what? I took back the charts. Why don't you guide us through like what you're thinking here, and let's just talk it all out. And let's start with the FOMC. So it's interesting. And hey, Ryan, I know you're popping in. Did anything you want to add to the Bank of England? Kman did a really good job covering, saying on balance, it's pretty on balance, I guess. Did anything you wanted to pop in and say about the Bank of England here?
No, Kay's pretty much covered it. It's a little bit of everything in there, higher inflation, higher unemployment, but it's not massively higher. Growth looking anemic. So yeah, it's nothing to get you excited here.
How about the other big story is how the yen came off with the yields and everything, guys? Kman, do you think? I mean, that sure was a tough top to sell.
Yeah. I mean, it's a dollar move. That is the thing, because if you look around, if you look across on the across the spectrum on the cross side, yen did not really gain a lot apart from versus Swiss franc, but that Swiss franc is trading weak for now. It's actually breaking on the euro Swiss as we speak. Yeah, that's
a year ago the Fed helped peak U.S. dollar yen with a statement or a presser, remember, where they were kind of dovish, and it helped
the inflation coming off.
Yeah, and then yesterday with Powell, I think the Fed has helped put in these highs a year ago or whenever it was, and now.
Yeah, that's an assumption I'm going to leave in the middle myself, but I do think that yesterday the trilogy, U.S. Treasury, ISM, and the FOMC really has had the market thinking about the dollar, at least in the short term right now. Tomorrow everything can change again because we have the mixed doubles NFP ISM services. But yeah, the market is really thinking about stuff, and yes, and that coincidentally came with starker MOF warnings and being very, very close to the top in the prior top in the dollar yen indeed. So the market has something to think about, especially on the dollar side of things. I would say. Yes, it could be a very good top, on the dollar yen, providing that those U.S. yields stay low now.
And I want to add here, Kman, and I know you and Ryan have probably covered a lot of this, when you were on the Flow Show, which, by the way, I got a chance once again to catch the last 10 minutes of the Flow Show. I'm going to miss that this next week. It was nice for a week. Let me just put it that way. But when you're looking around at central banks just globally, I mean, did the Fed really just basically say, hey, look, we're done here? I mean, yesterday, I mean, that's the message that I think the market is getting, that the Fed's pretty much done, unless we get some sort of inflation ramp up because of an escalation in the Middle East, and maybe we get some sort of flare up and they have to deal with it. But really, until then, if that happens, even if that happens, they're pretty much done here, right?
Yeah, that's what I said. I mean, it's the bar is high now for another hike. And it's going to be based on pure an inflation spike, I reckon, because we did have very good data out of the US during the month of October. But everybody can always look for some weakness somewhere in something. But overall, we had good data in October. Yet you know what? My feeling is a little bit that Yellen and Powell spoke to each other before she came up with the U.S. Treasury plan and him doing his meeting. It's what I said in the chat room last night. I said this is likely the most unhawkish. It's not a dovish meeting, but the unhawkish meeting that we had on its globality last night, the FOMC, right? So that really makes the market think about what's the next step or the way forward for the dollar right now. And we've seen the yields coming off, especially the longer end, which was also expected after the US Treasury as they prioritize the bills a bit more. So the inversion, let's say, is accentuated a bit for now, and yeah, all of it weighs on the dollar right now. Huh? There's undeniable. The market needs to rethink the situation a little bit for the dollar, I reckon. And
you know what's
I heard it described as a victory lap. I heard Paul's presser described as a victory lap.
And the thing
well, I'm just saying that's what I heard people saying. Yeah,
but and the thing is as well, if you look at the charts, then we did stop at quite important levels in quite a few currency pairs, right? Around around those lows in the Aussie, around the lows in the euro dollar, around the high in the dollar yen, the low in the cable, you name it. Yeah. And then that's also why I'm saying the market will have to rethink the situation a bit, because we could not break those levels.
Yeah, right. And you look at the euro. I mean, we talk about really holding lows. Even yesterday, it was like maybe a slight false breakdown. Ben brings up a good point, and I want to talk about it, because Ben says Blake agreed. The Fed said they're done, but they also said they're not cutting anytime soon. That's a correct statement. But you know, the market is kind of like what your wife probably blames you of, and my wife definitely blames me of, is not hearing her words and having selective hearing. I have selective hearing. I'm not deaf. I just hear what I want to hear when it comes to dealing with my wife and kids. And I'm sure you do the same. So the market does the same here too. They've heard the Fed say, we're going to just find where we need to be. We're going to keep rates higher for longer, forever, you know, and ever and ever and ever. But the market doesn't care, because the market just cares that if they're done, you know, hiking. And that's what they're cheering right now. I mean, do you guys have any commentary you want to add to that? Because
yeah,
maybe you guys aren't even listening to me. See, you have like my wife's selective hearing.
It's training. It's special training. It's hearing without hearing. Yeah, the market does do that. But as we know, it's not so much about the hike; it's about when the cuts are coming. That's what the market is in the market's mind now. Maybe not really much right this minute, but it's going to be coming in. It's the higher for longer. The data, the jobs numbers, and services will be important tomorrow, just to add or take away from this week's narrative and the higher for longer. That's what it's focusing on until they know that another Fed hike is moving further off the table and onto the wall into the emergency break glass box. And that's so it's not bothered about the hikes. It's now, right, well, how long can this data keep coming in strong? And when it does start turning, when are they going to start cutting? And that's what we're going to be trading. Maybe not today, maybe not tomorrow, but we're definitely going to be trading it going into next year.
Right. No, and that's correct. And then, but as you just rightly pointed out, that's not what the market is focused on just yet, but it will be. But maybe not today. No, speaking of today, I want to talk a little bit about the S&P as we're heading into the last big earnings day with Apple, coming up. So we are above the 200 DMA. Now it's early. Just remember that, here, this is not including pre-market. So this is the cash market. You can see right here, we're above the 200-day as far as futures go and CFDs go. We have a 618 that comes in about, well, it was 20 points higher earlier when we posted it. It looks like we can get maybe at least another 15, 20 points out of the S&P here before we start running into some pretty key Fibonacci retracement levels, which is also a 38% retracement on a long term. I'm just showing you guys how there's a confluence there. Just I don't want to make the chart super crazy, but you can see just most recent move down 618. You guys see that? Okay. Full move down 38% retracement. We call that a confluence, guys. So that means a confluence comes in right around roughly, give take, maybe about 20 points from here. So that also should let you know that there's at least, in my opinion, there's at least 20 more pips of upside in the S&P this morning, especially at the open, which you need to be thinking about. Beyond that is probably has more to do with what happens with Apple earnings tonight or later on today. But right now we are seeing some dollar weakness come in. Now, remember, we do have weekly unemployment claims as Kman pointed out, which is, we have the non-farm payroll tomorrow. Do we get services tomorrow or next week? For some reason, it is tomorrow. Oh, I guess it's after
NFP. Yeah.
Got it. After the fact. Okay. But let's stop and talk about the dollar for a second. Yes, the dollar's under pressure. I get it. Yields are coming down, dollar's under pressure, but the dollar index is still above its breakout point. I mean, and it's not like places we haven't been. I look at the dollar, it's like, even if we drop back down below 106, it doesn't look like really technically damaged at all. I mean, people are getting really hot and heavy about the dollar, like it's topped and bonds have bottomed out. And we can go look at the 10-year really quick just so we can take a look at what's happening with, there's the 10-year. Oh, we bottomed out. So, you got a lot of big names that are buying bonds down here and talking about it, on CNBC and Bloomberg and everything else. But I don't know. I mean, do you guys think the top is in? Do you think this is it? I mean, do you think that this is where, we start going back to data and saying, the dollar's, dunzo? What do you guys think here? What do you think, Dale?
I think there's a possibility for like 104.50 before the dollar regains its footing and tries to march up again.
All right. 104.50. That's sorry, guys.
Breakout.
Just gurgling something. That would bring us all the way back down here. I mean, the 50 DMA is not too far away. That's a good range. You can see it right here. That's a good range. Probably
what's going to happen. So you buy the world, everything's going to go up. I do have to say I'm not that impressed with the response in the precious metals compared to everything else. I know they're higher, but they, don't seem to have the same kind of rocket fuel in it. We're still off the highs of the week on the gold. And it was the high of the move in silver. I don't know. It's, still could be a little bit of a failing rally here. So maybe things calm down in the Middle East and they hit the metals one more time. That would really surprise people, because you would think if the dollar's going to do that gold would be at 2,100 with the dollar going to 104.50.
Yeah, that's gold is a tall order given the fact that we've rejected this all-time high for like multiple tries here. So I think people get if you're trading gold, and by the way, I think price action in gold still hold as long as it's above 1950. I think it still looks pretty damn good, but I would think that anybody is looking at this weekly chart going, I don't know if I really want to be, I don't want to know if I want to get caught in this again, or that again. Anyway, maybe you need conflict to really ramp up.
Silver looks worse. Silver looks worse. Put the silver up.
Yeah, it does.
It
sure does.
It really never got going.
Yeah, I agree with that. Ryan, what do you think about the dollar here? How are you reading the dollar as a whole? I mean, do you think that the dollar index is ready to break down? I mean, it's a big inflection point. I know it's a tough question to try to ask right now, but their answer.
It's a tough question because I never look at the Dixie as it leads nothing personally. But the dollar, it's I don't know how much of was end of month stuff. That's one of the reasons I went short dollar yen up in the 151s, because I just felt maybe we were pushing too far compared to where we were with the the yields, what yields were doing, what the Fed was going to do. They'd have to go super hawkish to add to that move up above 151, and that was never going to happen. So this is probably just a little bit of a reset at the moment. Does it mean the dollar's going to start collapsing? Absolutely not. Fundamentally, it's still, the best of the bunch. So you've got to watch your levels. Dollar yen, 150. We know the number. It's been the number for the last 2 weeks. It's going to be the number on the way down. If it holds that, it keeps that 151.70 high on the cards, and maybe a push up to the 152 we're all waiting for. But if it gets back under that 150, then it could be a bit of trouble. But what it does look like is we're back on that yield bus again, whereas for the last few days, particularly in the end of the month, we were off the yield bus. Dollar was going high even while yields were dropping. So yeah, and the euro's looking pretty healthy, bar versus some of the commodity currencies. It keeps bouncing. It can't break the, euro dollar can't get up for that 107, but it had another little half a peak at 105 and it couldn't get through. So yeah, we've still got the range and still waiting for a break either way.
Yeah, I mean, yesterday you weren't here, Ryan. You were out, milking a really nice lunch, as we were told yesterday with Michael Brown, and but we were saying, hey, if we can hold above 105.20, that's it's hard to be bearish while you're above that, and we held that support. But yeah, you're right. We're up here around 107, and that's I was going to defer to Kman here. I mean, look, K. As Ryan said, the dollar index doesn't really matter, but the euro does. I mean, and are you convinced enough to be buying euros at 107, knowing what the eurozone is facing right now, and knowing the data that plainly, I mean, obviously we got to see what happens with weekly unemployment claims here, the jobs report tomorrow, but really U.S. data has not been bad. Let's face it.
No, exactly. I'm very reluctant to buy euro dollar, to be honest. If I want to be short dollars, I'm probably going to look at something else than the euro. But it's undeniable that the euro is the biggest market, So people, if they want to sell dollars, the first thing they're probably going to do is buy euro dollar, and then think what they're going to do with other dollars. But I think there may be other dollars better than that. It's going to depend on risk as well, if your equity markets continue to rally, if oil doesn't do anything strange, like shooting up to 90 again, then risk may be doing better, and then I'll probably be looking at other currencies such as perhaps the Aussie or Kiwi to a certain extent, but I didn't really fancy that jobs report. But yeah, why not dollar yen if the MOF continues to send out warnings? Because as I said, the yen crosses are still quite at very high levels, actually, all of them. And it's only dollar yen that started to correct a little bit. So if the yen crosses would start to correct, then it's going to weigh relatively heavy on the dollar yen as well. So that's for that. And yes, I agree with Dale that the metals are not doing great, and I think it's kind of a catch-up move of the rest now on the metals. And gold has also been driven a lot by China and other central banks. So if you take away that demand, which is seemingly happening right now, then we're just stalling, right? And the market will decide upon next. But yeah, I've got trouble to buy euros, really. Well, this being said, I'm a little long euro sterling, but that's because I hate sterling even more.
Yeah, I was gonna say that's a loathing sterling story right there, right?
Yeah, but again, as I said, I think that what happened yesterday, those three factors, the Treasury, ISM, and Powell, really have had the dollar market needing to think and thinking in a dollar market is usually combined with a setback, and that's what we are seeing now. Yeah, especially that the longer end is coming back. Yeah, I mean, if you look at the 30s, yesterday we were trading comfortably above 5%. Now we're trading at 485.
Yeah. There we go. There we go. Yep. I mean, and we're coming. This, I would think this is really support this morning, right? Like right where we're at. I mean, I know you can overshoot a little bit on hourly charts, but you know, I would think this is pretty key support.
Yeah, and then that purple line under there is one that I'm keeping a very close eye on, and it's could be like coinciding with the 450, 460 in the US 10s, which I think is could be a bit of a zone of truth on the 10s.
You know, speaking of which, taking a look at Japanese yields. You know, there were some articles overnight that came out that I'm sure you guys were awake when we had a little bit of volatility in the yen. Maybe maybe about 3 hours ago or so. And I'm looking for, you know, if the you know JGBs get back, you know, a little higher here, that's going to get my attention. But right now they're under a little bit of pressure here. But what do you make of like the, you know, some of these news articles that are coming out about the BOJ?
You know, Bank of Japan bought JGBs overnight, right?
Wow, really?
Yeah.
So
it's still, I mean, in a way, it's still MOF versus the rest of the world. And the article this morning was still talking about next year, you know, and the slow path of UEDA, which we have already been mentioning a gazillion times. It's still MOF against the rest of the world, even though UEDA is on a path to normalization, but it's just so slow. A lot of people are saying they effectively killed YCC, but then buying bonds even before it gets to 1%, this is not really my kind of thinking of killing YCC, you know.
Yeah, right. Hey, so real quick, I know we just got a couple of minutes left. I wanted to just show you guys crude oil. I mean, crude, you know, is continuing to weaken here. And you know, I think this is going to be a continued tailwind for equity markets, you know, as long as crude oil stays weak. We do have 127% extension that comes in right around the 79.20 level. You can see it's a 50% retracement of this, the whole move, this whole, you know, last move. That confluence comes in just a little bit lower, and I want to see what the reaction is going to be from there. You'll also notice that the Aussie and the Aussie and the Kiwi, they've been reaching higher. We're coming up into some pretty good resistance, I think, for the Aussie, because if you look at this is a long-term broken trend line, right? You can see that red line right here, and it's been really messy. But you know, chasing the Aussie higher, it's kind of like chasing the euro higher. It's like, you know, you run into a wall, and then you start looking at copper. Copper's not acting particularly well today, you know, so just keep your eye on copper there. I think that's gonna, you know, allow us to realize if we can continue to chase these anapodians higher. So
that JGB chart you showed, Blake, that was an island top, the way it gapped up and then gapped down, and it leaves people trapped. Yeah, was that it? Yeah, shorter time frame. But
yeah,
even that, you know, looks like an island.
It does. But you know, that's where the, you know, YCC is at, right? Is at 1%.
I heard someone say that BOJ broke something yesterday with that move. I don't know what
they broke the backs of the shorts, right? Yeah. I think I was mentioning to somebody, like, you know, somebody was asking about like risk on Twitter. Somebody asked me something, and I was like, well, you know, the BOJ basically, you know, kicked the door open on, or you know, cracked the door open on risk, and the Fed just kicked it open. So, you know, that's what's kind of kickstarted the equity markets rally. But we are still facing a lot of risk as we come into the weekend. And by the way, we have weekly unemployment claims. Let me just say that. Let's get ready for that. Give me 1 second.
Tip of the hat to Stelios, who's been, looking for something like this, and tip of the hat to Tony Rebed, who was calling about him in the S&Ps last week.
There you go, Tony.
We have some smart traders in our community.
That is Tony in Connecticut. Tony in Connecticut. I know who Tony is. Hold on. Let me grab. We got the S&P. We got yields right here. We have the dollar index. I'll put right there. That's a 15-minute chart. You can see the dollar. And then we have jobless claims coming out. I doubt this is going to be too big of a mover, but we'll see. We'll see if it is. All right. Ryan, we got a few seconds. Any last minute comments here?
No, obviously keep an eye on Bailey. You know what he's like. Usually every time he speaks, the pound drops.
His press conference starts here shortly, right?
Yeah, so in about 30 seconds.
Okay. All right. Gosh, Bailey.
You said you're having a Bailey's already?
Yeah. Another one?
In your coffee? I like it in my coffee.
Kman, we got just a few seconds. K, any last minute things?
No, not really. Not really. I've said what I wanted to say.
All right. Well, shoot.
Really.
Trying to get
Would
this.
you mind repeating yourself from the Flow Show and here and here again?
Keep an eye on Euro Swiss. It's breaking. It's breaking up.
S&P is rallying. Come on. The claims are.
Jobless claims are okay, but that continuous claims is ticking up again. You know, it keeps going up even while the headline claims number is there or thereabouts. So 1.818 million, up from 1.790 million previously.
Yeah, I want to say the market just is looking for excuses to be bought at this point. Like give me an excuse to buy. Dollar yen, by the way, is cracking. It's getting close to 150. And the euro is at highs. Aussie's back at highs. Kiwi's back at highs. So yeah, we'll see if that 150 level is going to hold in the dollar yen. And with that being said, I think do you have an interview today? Okay. Dale.
Yeah. She retweeted the tweet that she's here, but she's not in the room. If you're in the room under any other name, Angie, raise your hand, please.
Angie got us a grain. Yeah, okay.
Yeah,
let's see if she pops in. She might be running just a second late, which is fine. We'll I'll continue on while you're the guest stop hunter. No, is that what you call yourself? I forget.
Guest hunter.
Forex guest hunter. Guest hunter. That's what it is. All right. So dollar index. Just a little heads up, guys. We are at the 10. This is the big, breakout point. 105.88. Well, we've been saying 105.90. It's basically here. You can see it. And the euro pushing up against this resistance. Now, I need to point out, everyone, it is still very early in the session. So where we close today, I think is going to be really important as far as pretty much everything. So it's whether we follow through with the Fed from yesterday or we get a bit of a reversal. It's going to be really key. You got Andrew Bailey that's running his yap right now. So I think we're going to be all watching what he has to say. Everybody says he always kills the pound, but maybe today's different. Maybe today is different. Looks like Angie is here. So yes. I'm going to pass it over to you guys. Thanks everybody for being here. Appreciate you. And we'll see you tomorrow for the non-farm payroll. Remember, we will be here. So we hope to see you here as well. But stick around for Dale and Angie.
Thank you very much, Blake, team, everyone. Okay. So Angie, welcome back to F.A.C.E. How are you?
I'm good. How are you doing?
Okay. So we've had some major moves with the Fed and the markets and risk coming back. When are we going to get some action in the grains, and what are you thinking?
Oh, I mean, I think there's got to be a fundamental catalyst that we're going to need to see happen here that's going to kind of provide us this ability to break out of the range, I think. And there's a few things that could come from that. I mean, most of what we're watching right now kind of hinges on two separate things, which is South American weather. We need to know what we're going to see when it comes to Brazilian and Argentina production specifically. Their weather will definitely influence everything that happens there. And then, how strong is China's demand going to be? We've seen them be relatively strong when it comes to soybean imports over the last year. Seen them, near a record amount of soybean imports here over the last year. And so the question is, does that continue? Or did they do some restocking, and what does that mean for U.S. demand as a whole?
Okay, so definitely, is there any kind of seasonal pattern as we go into winter that we should be aware of? Looks like, the beans are acting the best, trying to dig their heels in. Corn, I think, just made new lows, and wheat
Close
is
to it,
not
yeah.
making, not quite making new lows. So you would think there's at least a bear market rally in these. Perhaps a weaker dollar will end up supporting the grains. You think that the strong dollar has been part of the problem
Yeah, I
of
think, the
prices?
strong dollar limits our ability to compete globally. And so what we've seen is just a really slow start to exports as a whole. We've seen soybean exports slower than what you would like to see. There, the USDA has already anticipated that, soybean exports on the year are going to be in line with where we were at during the trade war. They're going to be incredibly low compared to what we've been used to the last few years. So there are our bar is already low, and we're kind of underperforming that still. Now we have seen a pretty substantial pickup in export business, mostly the Chicago, the soft red winter variety. China had some pretty major problems with rainfall, heavy rainfall ahead of harvest there, and it damaged a significant amount of their wheat. And so we're really kind of watching to see what that looks like. So wheat exports have picked up significantly. Corn exports, we've seen really strong demand from Mexico, which has been interesting because Mexico has been in the headlines or of conversation simply because of their stance on non-GMO, and the U.S. kind of arguing with them about what they're going to do from an import standpoint when it comes to non-GMO corn. So we need to see what would be our traditional world buyers outside of Mexico come into corn. And, like I said, a few other things. Like the problem right now is we're just kind of here. And nothing is really indicating that we're going to be well outside the range, currently at least, of what is anticipated. And so that just keeps us, I call it violently range bound in grains. And so I think what we're seeing really currently right now is a lot of folks are just setting themselves up to buy on our dips. And then they sell when we reach some of these resistance levels. And we just haven't been able to have this follow through. Like you saw corn trade up above $5, for a day. December corn, we have a gap at 524 on the chart, and we still just couldn't muster strength much beyond 510, and now we're back 2 weeks later to 473 on the board and testing the lows. And so we just really right now, there's a lot of things that could develop and turn into bullish stories. But if they don't, if Brazil produces a crop that's in line with current expectations and China demand really just kind of remains lukewarm when it comes to US products, grains don't really have a story. Unfortunately, we just are kind of here right now.
So do people hedge at these levels, Angie, or they lift their hedges?
No, farmers, for the most part right now, we're not actively doing much. Soybean harvest is continuing. And so some folks are kind of out producing what they had anticipated to produce. And so that's helpful, when it comes to making additional sales and things of that nature. We've been just kind of cognizant of what the range has been. So we were aggressive, with adding additional hedges in if we felt we were undersold, around that 510, 515 on the March board in corn. We have targets to see if we can get back up around that 1330 level in beans. And so no one's really aggressively selling this level as a farmer unless they, need to turn the bushels into cash or have an overabundance of production that they weren't necessarily anticipating.
How about on the meat side of the equation? What's been going on? I haven't looked at live cattle, hogs, bellies, any of that in years. I took a glance, I don't know, few months ago, and the prices I remember and the prices that we have now. I know what I
Very
paid
different
for a
things.
ribeye steak at the store. It's a lot. So what's been happening with the meats?
Yeah, we've just seen, in times of higher input costs when it comes to fattening cattle and just feeding livestock in general, you tend to see a bit of a contraction in herd size. It costs more, margins are squeezed, there's more risk associated with kind of feeding these animals. And so you've really seen that happen when it comes to beef cattle across the US over the last couple of years. We've seen basically the beef herd shrink to its smallest level in several decades. I think it's almost 40 years, maybe more than that. Someone can yell at me that's an expert in the livestock side of things. But, when it comes down to it, we've seen our supply kind of continue to shrink. And from an overall standpoint, the question now becomes, what happens with demand? Does the consumer really start to cut back when you're looking at $7-8 a pound ground beef? What does that mean when it comes to the biggest demand sector for beef, which is fast food, hamburger and things of that nature? Do we see more in the way of cattle being brought in, imports of different cuts of beef, things of that nature? So from an economic standpoint, we kind of don't have a reason to sell off in fat cattle, simply because we just don't have a lot of them, and we really haven't seen any major signs of a significant reduction in demand. And so the market's job is going to be to try to encourage an increase in production, because we're going to need it, obviously, or kind of try to get that consumer to change their preferences, which is part of why you've seen chicken, poultry prices rally and things of that nature, because the consumer has transitioned, but it's difficult to be nimble in the livestock sector.
Look at this low was right around a lot of lows during COVID,
Mm-hmm.
and never looked back. See, these are the prices I remember, Angie.
Yeah.
Okay, so we're talking about a triple
Mm-hmm.
from
Yeah.
where we used to be historically. Pretty amazing.
What's most amazing is the experts in the business are still bullish. You know what I mean? And so I'm not going to call myself an expert. I kind of watch livestock out of the corner of my eye because it's an important demand sector, and it has an influence on farmer profitability as a whole. But the experts are still very bullish fat cattle. And so I just sit and kind of watch astounded, simply because we are in such rare air.
Yeah. So I believe there was some avian flu just in time for Thanksgiving. So people pay up for turkeys.
They said that turkeys are cheaper this year. So I'll be waiting to see if that is true or not. That was a headline on the news the other day. But that's
really,
avian flu is quite seasonal, and I think the fall outbreak has been a lot lower than what we had seen in the spring. So at least we have that going for us.
I just heard there was going to be some major culling of the turkeys. In time for Thanksgiving. Okay.
Well, that's
so I love turkey.
Me too. I'm looking forward to it right now.
Anyway, the L-tryptophan. So, what else are you doing? Anything new business side for you, Angie? Or are you looking for people that may be interested? They're not farmers, but they trade everything. It doesn't matter what the symbol is, as long as there's a chart. Would you like people to follow you, come to your website?
Yeah, you can check out our website at consisag.net. And so that's changed a bit here. My husband Carl joined me the 1st of October, and so my husband and I, between the two of us, we have almost 50 years of experience. So I won't embarrass him by saying that he has 10 years. Oh, I just said it. He has 10 years more than me. But we both met, we both have a in-depth background in risk management on the commercial side and when it comes to working with farmers. But in addition to that, we also, really pay attention to what's going on in the world market. And so this market structure is very different than what you've seen over the last couple of years. I think there's been a lot of people that have been somewhat, I'm going to call them commodity tourists because of the inflation conversation and some of these other things. And so it's easy to get sucked into a market narrative potentially that could be false or could, not be supported by the underlying fundamentals. Because one of the things that is great about grains and oil seeds, more than really anything else, is that the cash market is the North Pole, in that regard. It's such a transparent and really kind of heavily traded market around the world from a physical grain standpoint, that what is taking place in the world cash market really has a big influence on what happens when it comes to spreads and futures movement as a whole. And so one of the things that we do like I enjoy doing especially is working with folks outside of the industry to just kind of explain, here are the things that matter. Here are the seasonals. Here are the situations that could influence price direction, and here's what you want to be watching, because these are the underlying, bubbles that'll turn into a market story later on. And so, yeah, our website, and we're pretty flexible when it comes to consulting relationships on what that looks like. But we also put out a decent amount of commentary each day and a weekly overview and some of these other things that we find are very valuable.
Do you find that FX movements in USD yuan affect China's behavior in the grain markets? Do you follow
I think so. I think the Brazilian currency can influence it more than what we see happen with the dollar and the Chinese yuan, but it definitely has an influence because it reduces or influences their buying power or makes them want to look in a different direction. We've seen it here with currency conversion happenings where Brazilian farmers are getting more for their product, even though on the global market they're selling it cheaper. And so there's a lot of influence there that we have to watch on a day-to-day basis that can kind of impact grain movement on the whole.
Okay, so Brazil, Argentina, you don't even know what kind of currency they're going to have there.
Right. Argentina, their own. They have an export program right now that they've been working on. One of the things that we are watching, though, in Argentina, now that you brought it up, is the outsider that is coming in that a lot of folks thought was going to win in the last election primary. He's pushing to really kind of return to a dollar peg in their currency. And that could have some huge farmers in the country, because currently right now they keep their grain and soybeans as a hedge against inflation, because they turn that into dollars when they sell it. And so if we were to see that sort of hedge against inflation removed, you would probably see a pretty sharp transition in world cash market trades, because the Argentina farmer would completely different approach. So we'll be holding our breath for a couple of weeks to see who kind of pulls that election out. And, it's kind of a coin toss, but it will be interesting because it could have some pretty major implications. Brazil, if you look at South America, Brazil has grown exponentially when it comes to their agriculture sector, while Argentina's actually contracted, and both are pretty capable. And so it's just economic conditions that have had that influence. And so we'll definitely be watching the election here to see what that means for their economy and their farmers going forward.
Yeah, I have this, Brazilian currency against the yen and against the yuan, and Brazil's been outperforming for a while. Tavi Costa I had these up for him because he is very bullish Brazil.
Yeah.
Okay, so how about what's going on with politics? Anything happening that we have to be keeping an eye on? USDA, could programs be cut? Is that are we going to still continue to use corn for ethanol? There seems to be plenty of it around, so it's not as much of an issue. If we are in a bull market in corn, it becomes more of an issue. Anything on the biofuel side that you're paying attention to?
Yeah, we're just watching. I mean, we obviously have seen pretty substantial growth in the biofuel sector, specifically biodiesel and renewable diesel. So we've seen these major crush projects kind of kick in. And so that's been helpful. I talk a lot about poor exports and, kind of dismal sales when it comes to China and some of these other folks. But, we're transitioning here in the US to a domestic user of beans. And so previously, we were about half and half. We would crush half the crop and turn it into soybean oil and soybean meal and use those products. And we would export the other half for other countries to do the same. With the kind of intro of renewable diesel and biodiesel and some of these other subsidies that we've seen, there's been a pretty substantial increase in domestic crush. And you've seen the oil market, soybean oil market get really volatile. We're seeing soybean meal get really volatile. Some of that has to do with Argentina, but the change in market structure is big and it's quick and it's noticeable. In addition, we had yesterday the major airline groups through their support behind SAF, Sustainable Airline Fuel, using ethanol. And so prior, in the Inflation Reduction Act, one of the things that was disappointing to the ethanol camp was that SAF, the math that they used to determine whether or not it was kind of one of those carbon neutral sort of fuel supplies, that left ethanol out. The program, or the whatever they call it, the formula that they're using, it just doesn't count ethanol as a carbon neutral crop. And this isn't an opinion. I am not a scientist, but we did see Delta and others kind of throw their support behind a different formula that would allow ethanol to be used. And so that could be big. One of the things that we have heard about over the last few years in ethanol is that you're going to see demand continue to fall off because of, reductions in gasoline demand due to EVs and some of these other things. And so if we can kind of provide a secondary market structure for this ethanol that we have, not only does that kind of help continue to support the production that we have in place, but it also can kind of incentivize some infrastructure gains. So that'll be something we're watching. It's in the hands of the Treasury Department now. So Janet Yellen, I guess, makes that decision, which is interesting in and of itself. And we'll know that more in December.
Of course, throughout all industries, lower interest rates would help. How will it affect the agricultural industry if we're seeing a peak in interest rates?
If we see a peak, I think it's not necessarily where we peak, it's how long we see sustained levels as high as what they are. I think that really kind of matters. And so one of the things that we're seeing is that it costs more to hold bushels. I think that's part of the reason that you're seeing a slowdown in world demand as a whole. You're not going to be in a huge hurry to go out and buy as much product as you possibly can when you're looking at holding a bushel of corn costing you, 7 to 9 cents. Bushel of wheat's 9 to 12 cents, give or take, and beans are almost 20 cents a bushel per month just on interest costs alone. And so you're seeing the world pipeline, the world demand for one stay a little hesitant, or at least a little bit slower, because it costs so much more, not only to own supplies, but to hold them. But in addition to that, you're also going to see folks who have supplies on hand be a more willing seller in this market structure, just because, like I said, it costs so much more to hold it. The value of having cash in hand is almost greater than the value of trying to guess what happens next in the market. And so I think there's going to be a lot of different things that kind of happen as a result, and back to your political conversation, when it comes to growth and domestic demand, a lot of that's going to be hinging now on subsidies and tax credits and things of that nature, because you're going to have to kind of increase the incentive in investing in infrastructure when it costs so much more to do so. And so there's going to be some pretty big factor. I mean, it's going to probably slow down equipment purchases. You're going to see, other transactions be impacted. The value of cash starts to change. So do you see, a slowdown in some of these gains in land values that you've seen at auctions? Do we see a departure from some of these investment groups that have been buying a lot of this land? There's certain things that could really influence the picture in agriculture overall, very long term, but a lot of that just depends on how long rates remain elevated, more so than how high they hit. How quickly we roll back will probably have a greater influence than anything else. Okay,
so again, rates play a big part of everything in every industry, the cost of money. So that's real interesting, the carrying charges, decentivizing people from holding positions.
And that influences
that may be part of the problem. So maybe
it is.
Right.
Well,
so go ahead.
That's what I was going to say from a money flow standpoint. You know what I mean? Like, it's hard to get speculators to come in and buy a front month that's 25 cents less than the Jan. You know what I like? Now, no, of Jan's rolling off here pretty soon. You look at the soybean spreads, but to see November to January carry at the widest level in over 23 years, that says a lot, and it kind of discourages active speculative participation, unless you're just going to kind of get in and get out, which a lot of the speculators that are traditional participants in the ag markets tend to get in and just kind of hang out for a while. And so that's the other thing. That's part of the reason why you're seeing, in the commitment of traders reports, the outside traders are, short in wheat, short in corn, and sitting, close to short in soybeans, or at some of their lowest length in since the spring. And so there's a lot of things that are happening there that influence, and yeah, so you've got to pay more to hold bushels, and the market structure is showing that as well.
Okay, well, I encourage people to follow this story. You saw what happened to beef prices. One day that's going to happen to grain prices. So pay attention, and Angie would be a great resource for people interested in the fundamentals of what's happening in the grain complex. So Angie, I want to thank you again for coming in here and updating us about what you're seeing from your standpoint in the middle of farmland.
Thank you for having me.
Yeah.
I always love coming on to talk.
Oh, okay. Well, great to have you, and appreciate your giving spirit of giving your time to talk about these things. There aren't a lot of people with coverage on the grains. I think they're important. You can't eat gold.
That is true. You can try, but it'll hurt.
All right. Well, your friends that were worried about the dollar when it was, actually in good shape, and we had that huge dollar rally. Now might be a time for dollar hedges. There's a dollar.
We'll have to have you come back on and talk to them too in that group one of these days.
Okay. So thank you, Angie. I mean, have a great holiday season, and we'll speak in the winter when you're going to be needing. How do you heat your house? Natural gas or
propane?
Propane. Okay.
Yep.
So you could be assured prices are going to be heading up on everything. Natural gas, everything. Thanks again, Angie Setzer, everybody. Follow her on Twitter at Goddess of Grains, and here's her website, Kansas. That's a kansasag.net, and you could just enter your name and be up to date with what's happening in the agricultural sector. Thank you, Angie.
Thank you. Have a good day.
All right, adios. And that's a wrap for me, everybody. Good hunting the rest of the day. See everyone for the NFP tomorrow. And don't just count your pips, count your blessings. And I'll see you guys tomorrow. You're welcome, everyone. You're welcome.